Hello traders, my name is Castaway Trader and today I'm introducing you my brand new TradingView indicator. The main idea behind that indicator is to catch a strong trending move up or down that normally starts in the morning. Before I start, please read that important disclaimer. Okay, this is one of those signals that is produced by my brand new indicator, which is called CAT Trend Trader. The whole idea is a combination of two ideas. Everything has been invented already in the stock market, and there are two big concepts for day trading. One concept is that you go with the trend, and this is why that indicator calculates trend on 3 different time frames. You can see those green lines. This is micro trend, this is macro trend, and this is medium term trend. And in the upper right corner you can see the information that shows you the current state of each trend and support and resistance for that trend. So the whole idea, the main idea behind successful trading is to trade with the trend. If that indicator shows you that all 3 trends point up, you should only consider long setups. That's a big idea number 1. The second idea, the big idea number 2, is you should look for a breakout or a breakdown setup early in the morning. That could happen after 8 o'clock in the morning Eastern time, around 9 or 10, and in that video I will show you a bunch of setups that indicator managed to pinpoint in June 2023. So all examples will be fresh. And finally, once you go long, you've got to take care of a risk control, and this is why you have that purple line, which is your rolling stop loss, and when price hit it, you may close the whole position or part of it, and you can sell the second part when price retests the high made before price touch the stop line. Here you can see the red line and the green line. This is what I call morning resistance and morning support. There is a very well-known concept which is called Opening Range Breakout. It's been in the market for years. And the idea is that you track a trading range of the first 15, 30 minutes or 60 minutes, and you take a trade when price gets out of that range. I tried that concept, and in my opinion it does not work well. You can test that original idea by yourself. In description of that video you will find a link to my free TradingView indicator Opening Range Breakout. In my opinion it produces a way too many false signals. So what I did in that indicator, I tweaked that concept. I changed the way how that opening range is calculated. And you can see we have red line, which is morning resistance, and we have green line, which is morning support. So our setup again is that we need to have 3 green lines that tells you the trend is up, and we need price to get out of that morning opening range. So here you can see June 30, the very last week, price popped over the red line and it kept going up for a couple of hours, making a nice gain for any day trader. That's another example. We can see June 28th, price breaking out of that opening range, and we get buy signal here, and you can see that purple line, and here you could sell half of the position, and once price retests the high made before price touches the purple line, you could exit the remaining 50%. But look what happens then. Price dropped down again to the very same breakout level, retested it, and popped up again. I don't recommend to trade that setup because the very first long setup in the morning is the right setup. This is when you can get a really strong move up. That chart shows you two trading days, June 23rd and June 27th, and you can see two different types of setups. So that one is a short setup. You can see price dropped under the low edge of the opening range and it kept going down. But what's really important is that all three trends were red. You can see macro is red, midterm is red, and short term is red. So that told you that you had to consider only short setups. And again, you start watching that purple line, your rolling stop. Then basically the price touched it, you've got to sell, you've got to cover at least half of the short, and then you can wait until price retests the low made before the pullback to the purple line, and this is when you exit the second part of the short. And now let's move to June 27th, and here you can see an opposite situation. Price had a narrow opening range, it broke out, but here you don't see buy signals. Why? Because at that moment the macro trend was still red. Yes, you really want both conditions to be met, and you've got to be prepared that you will miss some great trading opportunities. But this is our rules and we've got to follow the rules. Again, that TradingView indicator is called CAT Trend Trader, and later in the video I will explain how you can get access. And that's another example. You can see we got breakout over the morning range and all three trends were green, and we got a nice move up. And another day and another setup like that, the price popped up nicely around 10 o'clock in the morning, and price started to trend up like crazy until midday. And again, once price touched the purple line, you could exit half of the position, and once price retested the high made before the pullback, you could sell the entire position. This is June 21st and a great short setup. This is where all three trends went red and price dropped under the low of the opening range, and we got a really strong decline into midday. Again, we could sell half of the position, we could cover half of the short here, and we could cover the second half of the short later in the evening. June 15 and another great trending day. You can see that was an early signal when all three trends went green, but I would recommend waiting until price breaks out of the opening range, and then you can ride that strong trend, and you could see that the price kept pushing higher into the close, so it topped around 3 p.m. Eastern time. June 12th, another great example. Price is breaking over the opening range. All three trend indicators are green. You go long and you just ride that crazy strong rally until it touches the purple line, then you can exit half of the long position. June 9th, again break over the opening range. All three trend indicators are green, and you can see a very strong spike up, and you can exit your long here, and you can set a stop once it comes back up, so you can send part or the second part of the long here, or you can set your stop here and you will exit it half of the position here with great profit, and here you would sell the second part with a decent profit as well. And here you can get the retest setup that normally sometimes happens around midday, and you can go long here again as long as price holds over that broken resistance, the red line that now turns into support, so you get buy signal again. But here you should not expect another move up to a new higher high, so you may exit that long when price retraces 50% or 61.8% of that decline. That's another example that sometimes you can get a really volatile day. For example, that day, June 7th, started from a decent long setup. You see that by one label, you could go long here, and you see price kept over the trend line, because once price goes over the morning resistance, that resistance becomes your main support. And you see price kept holding over, and then we got that crazy spike, but that spike got brutally faded, and you could sell your long at break even at that red line. But immediately we got a new short setup because price dropped under the green line, and the green line was morning support. And on the morning support, when all three trend lines were red, that was a great short opportunity. Look, that happened again in the morning around 10:30 a.m. This is the time when trading moves normally start, and look at the downtrending move. It kept going down until the close of the day. This is another example that sometimes when price goes over the morning resistance, it pops into midday, and then it comes back down to retest that red line from above. Again, that red line, the morning resistance, once it's broken, it becomes a major support of the day. Another great trending day was on June 1st, 2023. On the chart, you can see that on June 1st, bulls managed to push NQ mini futures over the morning opening range, and the price kept pushing up until around 3:15, when it finally touched that purple protective stop line. That indicator allows you to set up your own trading alerts. You can set up buy alerts or short alerts, and those alerts can be delivered to your email box, or could be produced as like pop-up notification on TradingView. It works great when you have TradingView mobile app on your smartphone. This is when you can actually take a trade even if you are not at your desk, by making a trade from your smartphone. Please note that no indicator can protect you from whipsaw. And here on that day you can see a failed breakout setup. It was June 2nd and everything went well. You can see all trends were green, and price popped over the upper edge of the morning opening range, but then immediately it got faded. It tried to broke under the support, then it came back again, produced another buy signal, and it did not go anywhere. You should be prepared that there will be days like that, and this is the cost of your business. On that day, you would probably get stopped twice. You would go long here, and then you get stopped when price drops under the trend line. This is where that information is displayed on your screen. It's called morning resistance, and the green line, location of the green line, would be shown here on morning support. You've got to be prepared that there will be days when that indicator, that setup, would not produce a winning trade, but you would get stopped. Another similar whipsaw day was June 13. You can see that we got a very clean buy setup in the morning when price climbed over the morning opening range. It kept moving up. In that case, you could set a stop under the red trend line, and once it broke under the red trend line, like here, you would get stopped. And then there was another attempt, and that attempt failed again. So the rule of thumb is you normally go long only on the first breakout. I showed you many examples showing that if it's the real breakout, it would keep going higher. If it goes up and then comes back down inside the range or breaks under the morning range, that's a really bad signal for bulls. That tells you that bulls are weak, and it does not make sense to try going long again on that day. This is a brief introduction of my new CAT Trend Trader indicator for TradingView. You can read more about my indicators on my website www.monkeymakesmoney.com, or you can contact me by sending me email with any questions you might have to castawaytrader@gmail.com. Good luck with your trading.